Get our market master of the day now. Jyotivardhan Jaipuria, Head of Research at Bank of America Merrill Lynch, joins us to talk about the markets. Hi Jyoti, good morning. As always, thank you for joining us on the show. 10 out of 10 people that you speak to believe that this is a multi-year bull run for the Indian markets, and there seems to be no debate tolerated on that assumption at least. And that would make one a bit cautious, at least, skeptics who look at the glass half empty most of the times. Do you think consensus will go wrong this time around, or is it a given now that this will be a big bull run for Indian equities?
Yeah, I'm also in the same consensus camp for the change, because generally I'm one of those, who's always in the opposite camp. I also believe that this will happen. Now, of course, there are some things which have to go right, because, when we go on this assumption, we assume that reforms will keep happening and, things will fall into place, corporates will start spending and corporate balance sheets will look healthier. So there are some assumptions behind this, but, if you look at cycles, then it's reasonable to assume that the earnings cycle now is about to take off, because we've had 4-5 years where earnings have been very, very mediocre. Typically, if you go back into history after such a spell, you have a 4-5 year spell where earnings average 20% plus. So we are probably somewhere there. I look at a lot of parameters. So if I look at margins today, they are at 18-year low. To that extent, you think margins at some point will revert to mean. If you look at corporate profits as percentage of GDP, again they are at a 10-year low. Again, if they revert to mean. So a lot of these parameters which I look at makes one think that maybe over the next 4 years, 5 years, earnings could double out, and that is really what will drive markets.
Okay. That point is taken, Jyoti. For the longer term, of course, things look like they could be on the mend purely because of the low base that we're working with. But what about the short term? For example, this morning we have a bit of a shock in the form of L&T's numbers. Is it just a case of trimming of froth or mere profit booking on some of these names like L&T? Or do you think there could be some signs of a trend reversal?
No, okay, so like shorter term our view has been, and this was before the budget came out also, that market has expected a lot, it's rallied a lot, so we probably enter a phase for the next few months where we're probably going to be range bound to slightly down in the market. We've seen FII money come in, and I think from now on the money will probably slow down a bit, and even if it comes, it will probably be sucked up by the primary paper which will come in. There are lots of QIPs, as the whole government disinvestment to be done. The second thing is, people have played for expectations of next year's earnings, but that's far off into the future. Current earnings are not going to be very exciting, and to that extent market will always be playing this. The future looks great, the short term is not looking that great. Plus the third thing is there's this worry about the monsoon. If somewhere we have seen inflation trend down quite a bit, but inflationary pressure may start picking up. So our view has been that from now to probably October or something, we probably are in for a bit of range bound market with a bit of correction.
Okay, fair enough. I was going through your note where you say that, in fact, you maintain your Sensex target for the end of the year at 27,000, and you say that one should buy the dips. But I fail to understand where the upside will come from in terms of leadership. I mean, if you just look at stocks like L&T, the way they've performed, the run-up has been good, but the earnings are not reflecting that. In the oil and gas space, there seems to be no major trigger at this point. Banks are still having issues like asset quality pressures, etc. So where do you see the next leg of the leadership that will actually take this market to the target that you've suggested?
Our target is, of course, till a couple of days back it seemed like it's just coming very quickly. So the target is not too much. But if you think of where the leadership going to come, I think a lot of the leadership is going to come in the domestic names itself, because that's where the margins are. If you take a 15-year view, margins are at lows and margins could rebound quite sharply. So, like you said, the PSU space, it's a space which is relatively very under-owned. Over the last 8-10 years, everybody's stopped really owning it because of the subsidy pressures. If the government takes meaningful steps to ease the subsidy burden, like diesel is more or less done now, diesel subsidy is gone. So then we have to focus on LPG and kerosene, and if we start seeing some steps towards reduction in LPG, I think there'll be a lot of interest in that sector. Another sector which is totally under-owned is the PSU banking space. So for good reasons, everybody was worried about the asset quality there. But once you start getting a turn in the economy, then, asset quality starts to ease off. And, those fears ease off, then people will start getting more comfortable with the public sector banking space. So there are lots of pockets like this. I think most of the things which are domestic India, probably over the next 4 years, are going to see very strong growth. So it is just playing, okay, maybe short term they've run up, but at some price I want to buy these things.
I notice in your list of large cap and mid cap top buys, you don't have any telecom names, Jyoti. This is one sector that has actually come out of the woodworks this time around. I mean, both Bharti and Idea are now up about 3 to 5% post earnings. Would you think of adding these names into your list for the long term?
Like our view has been that it's a sector which currently is doing well, but because of the impending competition pressure which will come in sometime middle of next year, market will be a bit fearful of what that would mean for the prospects of these companies, and to that extent we've generally been not very positive on this sector for the last 6 months. It was a sector which we played very strongly last year, but the last few months we've been a bit cagey on this.
All right. In fact, now Bharti is surging higher, up almost about 5% odd. 370 is what the stock has crossed today. But we have a question coming in, or a query coming in on our money control message board. So I'm going to throw that to you. Rohit Jain has written to us from Kolkata. He has about 3,000 shares of Tata Motors at 470, and he wants to know whether the stock will reach levels of 490. Okay, that's a very specific question. But generally for the auto sector, I know you are bullish on names like Eicher Motors, etc. But what's your view on some of these companies like Tata Motors that have, a big global presence?
We can't talk on specific stocks, but in general we are with the auto sector. We like the auto sector because, as interest rates come down and the economy picks up, the autos will start to do well. We prefer the four-wheelers to the two-wheelers. So two-wheelers is something which has done well over the last few years, and going forward we think it's the four-wheelers which will do better.
Okay, well, Jyoti, just hold on for 1 minute. We need to just cut across to the management of ITC. They're speaking at this point, and we'll just come back in a minute.
The company, in respect to the company's employee stock option scheme, is also placed before this meeting. Ladies and gentlemen, in the best traditions of democracy, a new government was recently elected with a resounding mandate. Shri Narendra Modi's clarion call for development through good governance touched a special chord in the hearts and minds of people. His vision and persona has ignited new optimism among almost all sections of society. There is renewed hope that a new resurgent India will be built over time, bringing pride and dignity to all. The spirit embodied in Sabke Saath, Sabka Vikas indeed holds the promise of inclusive and participatory growth. This is potentially a turning point in history and an opportunity to collectively script a new destiny for our nation.
All right, that's the management of ITC. But before we go to IDFC, one last question, Jyoti, from our end. We were speaking with Mark Mobius a while back, and he said that some of these consumer stocks are now looking good because of a pickup in discretionary spends. What's your view on the FMCG names like ITC and HUL that have reported decent numbers this time?
We actually underweight that fact because, as discretionary picks up, we are playing the auto side, which we think, will gain more from the improvement in business confidence. This pack has done very well over the last 4-5 years. Actually, their margins are relatively at a high point to history, and, valuations are also high. So we think this will tend to underperform the market.
Okay. So then finally, if you'd want to, just tell us about what will lead to this market up move, say in the next 3 to 6 months, because most of the triggers have played out now. Will it purely be a reform-led market growth that we'll see, or is it earnings that will actually drive the markets higher in the next 3 to 6 months?
So if you look at 6 months, it's actually a combination of both because, earnings in spite of being slow, they're still growing at 12 to 13%. So over the next 6 months, you probably have a 6% earnings growth anywhere which takes the market up 6%. The second is going to be reforms and expectation of reforms. It's like, I guess, somewhere from the end of this year, there'll be expectation that next year's budget will have a lot of positive things. I think there'll be some noise coming on GST, something on the oil sector, subsidies going away. So there'll be stuff like this which will help the markets also, along with, the normal earnings growth which we are seeing.
All right, Jyoti, we leave it at that. Thank you for joining us.